Okay. All right. So again, welcome to today's class on life insurance as we commemorate and remember the lives lost on 9/11. So I want to share a quick video here as we continue to remember the lives that was lost here. And so let me see. Hopefully this will play and leading up to our class here. So let me just do this here. Actually,
so as the bells ring this morning, they knew.
Okay.
It was all just too much. What we were watching couldn't be real. Our minds, our souls refused to believe it. The enormity of it all. The shock soon turning to sorrow. As we realized so many people would not be going home to their loved ones that night. The grief was uncontainable. The missing, the unaccounted for, their pictures and the pleas that accompanied them were cries for help.
He's my best friend in the world.
He was a great dad and hoping he could still be a great dad. If not, we love you, Roland.
And expressions of hope that somehow, some way, the unthinkable had not happened. There was heroism in the air that day. The way the passengers and crew refused to let the terrorist turn a plane above Pennsylvania into a bomb. The way so many people in the World Trade Center helped their friends and colleagues and complete strangers to save them. The way the firefighters, law enforcement, and EMTs gave little pause to entering buildings they knew they'd never escape. We were numb for weeks. The pictures from the Pentagon, the fire there that took days to extinguish, the hollowed out field in Shanksville where United Flight 93 was forced to the ground. The search for survivors, for remains. They said the air there was safe. Those who were there knew that couldn't be true. We watched a lot of funerals and learned over time the life stories of those we lost. And as the accounts of selflessness poured forth, we were inspired. We were in awe. How, we wondered, could they have done what they did? As heinous as those acts of terrorism were, what resulted was the opposite, we think, of what was intended. For a good long while afterwards, it felt like we were a United States. It was a great thing. The idea that there's more that unites us than divides us.
God bless America.
So as the bells ring this morning, as prayers are offered and names read, perhaps we'll all do well to stop and listen and remember. And I don't want to be poly.
All right, guys.
Really
so just wanted to let me stop sharing this here. Hold on one second here. All right, so I wanted to share that with you as
that way.
hold on one second here. All right, so let me just minimize this here. Exit full screen. All right, so I wanted to share that with you as I thought it was very important as we remember today in itself, man. I mean, it's 20 years ago, but we can just really, man, just really reflect. I just a couple reflections here. I just remember I was a airman just to join the Air Force, and I was in a break room, and I saw the first plane go through the building, and then a few minutes later, I saw the second plane, and then it was just I was 19 years old, and so never seen anything like it before. And so I just want to take a few moments here before we actually get into this class here. I want to open up the floor and see what were you guys doing, if you want to just share it with you. And then how did that impact you based off what happened? So let's just kind of open it up here. And I want to hear from just a couple of you. What were some of the things that you was doing? Because this is a moment that we remember where we were at the time that we saw here. So let's kind of open it up here and discuss that a little bit. Anybody want to share what you guys were doing when you first saw this happening?
I'll start, Sherman.
This is Nikki.
Hey, Nikki, how's it going?
I good. I remember I was in 7th grade, Miss Gross class, language arts, and I remember her turning on the TV and going across the way to the math teacher that was next door. And then she came back in, and like I said, she turned the TV on. I just remember her sitting at the desk with her hands over her face, crying. And we all were just looking at each other, and we were watching it on the screen because we were in 7th grade, so we really didn't know the magnitude of what was going on.
Right.
But the rest of the class was just, she didn't teach anything else that day.
Wow.
We just sat and just watched the TV the entire class period.
Wow. Yeah, man, that's just you saw the lives there on the video, man. It's just mind blowing. Thank you. 7th grade, man. I thought I was young, but wow, seventh grade. Thank you for sharing that here with us, Nikki. Anyone else want to share what they were doing?
Yes, Sherwin. This is Karen.
Hey, good morning, Miss Karen.
I had just actually moved from New York. I was working at the New York City Law Department, which happens to be right across the street from the World Trade Center.
Wow.
I was here in Florida. I was working at the hospital at the time, Florida Medical Center, actually. And suddenly friends who were still working there just started sending me, basically telling me what's happening, ran to the TV in the waiting room, and everybody was just like pierced to the TV at the hospital. And, it was not until that evening that I started getting pictures of showing the window that, I would be sitting at work and what outside looked like. And it was just disaster.
Wow.
And so till this day, I gotta say, I'll say thank God, but at the same time, it's just I think of a busy area like that and how many lives, was lost and impacted along the way. People were just looking like Dusty, my friend. I was talking to her while she was walking across the bridge, and it was just a horrific scene just hearing about it.
Wow. And I know, Miss Karen, that really resonates with you as being from New York, and you just kind of just grew up just seeing these buildings, and all of a sudden it's just like this terrorist has come through. So man, I tell you, it's just wow, thank you for sharing that. I know that just really hits home because that could have been you.
Yeah, I would have been in there. We went to the Gap store. It was a lot of things that we did in that building. Especially across the street from the building is one of my favorite store that's no longer there, Century 21. But we would have been right in that building, right there, probably having lunch or something.
Wow.
Yep.
My. All right. Anyone else want to share what they were doing during that time frame of 9/11 20 years ago?
Hey, Sharon, this is Greta. How are you?
Hey, Miss Taylor, how's it
How's
going?
the group?
All right.
Good. Well, I can remember I was working at, we were stationed at Fort Campbell. Gosh, 20 years long. I was working for the 160th, it's a special ops unit. And so it was unbelievable. I mean, because those guys go all over the world and do all kind of stuff. And just to sit there and watch it and not being able to do anything, it was, but believe me, they started planning that day. The black phone, the red phone, all the phones were ringing, and it was a sight. I mean, I just went home after work and just cried. I mean, it was just too much. Yeah.
Wow. Thank you for sharing that, and thank you for your service towards the government and your husband. We just really appreciate it. Thank you so much.
Sure.
All right. Anyone else want to share what they were doing 9/11 20 years ago? All right. So we're just reflecting before we go into our class here. We had a video for the ones that just joined in, and we saw the people and we saw the family lives that was impacted. And that's why we're actually doing this class today, because I can imagine the firefighters that's going up through those stairs, knowing the fact that, hey, look, my life could be in jeopardy, which a lot of them lives were lost. And it's think about the ones that was just jumping from the buildings, unfortunately, and their children's that they were thinking about, and the ones that was the last night, packing up to get on these flights to go to their destinations. And today was their last day on the earth. And you think about, did they have life insurances in place, right? And what did it cover enough for their kids that today, 20 years ago, how did that financially impact them? That's why I wanted to have this class today, because tomorrow's not promised, and unfortunately it's a situation that's tough to talk about because we always think it's kind of like invincible, but we're all going to die. There are two things that's certain in life: that's taxes and there's death. And so at the end of the day, is when our time is called, and we do have kids, or we have anybody that depend on us, whether it's some adults or parents, do we have enough in place for life insurance for our kids or our elder dependents that's dependent on us? And so that's what we're going to talk about today in today's class. I had an opportunity 3 years ago to visit New York, and went over to Wall Street as a good colleague up there. So I visited with him. But as Miss Karen is from New York, she could tell you that just a few blocks from Wall Street is the 9/11 Museum. And I'm sure many of you guys have probably visited the museum. And so I had an opportunity to visit the 9/11 Museum, and it was just riveting, man. Just seeing some of the fire trucks and some of the things that was still there. I mean, we saw some stairs that, it was a halfway stairs, and it was like the survivorship stairs is what it was called. And the firefighters that went up those stairs were the ones that was able to come down successfully and make it out. And so that stairs is a memorable moment that's in that museum today. So I would say, if you have not visited the 9/11 Museum, man, that's a great place. I mean, my wife, she's big into discounts. And as we stayed our hotel, she told me, she said, you're going to have a 9/11 view. And I never thought that the view that we had would be the one that we had. Literally, it was a glass window. I looked outside of my hotel view and I looked down, and literally it was just right there. The 9/11 museums, both of them, two of the buildings. So it was a great moment, man. But it just brings us back. I got 3 young boys. I got a wife. You guys know this, but man, I said, what do I currently have in place now for life insurance? And so that's what we're going to talk about today. And that's what I have planned here. So before we start with our class, does anybody else want to share any moments of what they were doing for 9/11 20 years ago, or if you visited the 9/11 Museum? Any final thoughts here before we start our class?
Hey, this is LaShonda. And I actually remember what I was doing, but I remember more going to the museum in New York and seeing the new memorial, and just how sad it is. Like, we remember that time and our body holds that space, but actually seeing it and the pictures and the dust and what they experienced on that moment and what the city was like, just gave it a different perspective. So if you're ever able to get up there to see that is definitely worth seeing, to kind of connect the physical and the emotional that we hold for that time.
Yeah, thank you for sharing that, LaShonda. That's when I saw it, we had to get on a flight a couple hours after we saw it, and it was just kind of like you start having second thoughts, man. Whole life in itself just comes, man, to just full grips, man. So thank you for sharing that, LaShonda. So I want to get into today's class. It's very informative. So I would ask that if you don't have a pen or a notepad, that you would go and get it. Because the first thing I want to ask you is do you have life insurance? And I'll probably imagine 80% of the people on this call today have life insurance. But the second question I want to ask you is, do you have enough? Because the general rule is you want to have 10 times or whatever your current income is. So if you make $50,000 a year now, The golden rule would be 10 times of 50,000 would be $500,000. But this also depends too, right, on how many kids you have, how many dependents you have, your age, your kid's age. But generally, what would be enough in order to support, if you have young kids, does anything happen to you, to support your kids while they're in school, your beneficiaries, who's going to be able to oversee them, your executors. All of this information here is important when it comes to your life insurance in itself. But what I want to do today is I want to break down the difference between, there's two different type of life insurances, and there's whole life and there's term. And so we want to make that today the focal point of today's class for us, the life insurance overall in itself. So as you will see here, there's two different type of life insurance, as I mentioned, the whole life and the term. And oftentimes people really do not know the significance and the difference between these two type of plans. And so we're going to break that down. So as I have here, for every $100 a month you spend in whole life, you spend about $5 a month on the term. And this is important because as you see here, a whole life is more than term, but term is only for a certain period. So that's where people get tripped up to say, well, I'm only going to have term insurance for, say, 20 years. What happens after that? Well, you either have term for a certain period, or you have whole life where you have it for the entire time of your life expectancy, but it's going to be a lot more. And we're going to see some numbers here in itself. All right. So what I have here is, say you're paying $100 a month, you would spend $100 a month. What you spend in a whole life, you spend about $5 in term. Well, the second question I have here is where does the remaining $95 go in whole life? Okay. Now, people buy a whole life because of a cash value. Now, let me just give you a disclaimer for the ones that's on the call today. If you got a whole life, I'm not a big fan of whole life, and I'm going to tell you why, and I'm going to break it down, and it's going to be a lightning bulb if you have it. All right. Just to kind of give you a disclaimer. So if you have a whole life policy, you paying $100 a month towards it, right? If it was, or $5 a month, if it was a term, basically. Majority of your money goes into, not majority, but when you pay towards that policy, a portion of it goes into a cash value. Okay. And so when you're paid out, the beneficiary, right? One of the pros about a whole life is the beneficiary, once this money is paid out, they don't have to pay taxes. So there's two reasons why people buy whole life. They buy it because of there's a cash value and is growing inside of that whole life policy. And depending upon whenever you pass away, the money that's paid out, you do not pay taxes on the whole life policy. Okay. But let's break this down. Let's look at this gentleman right here for this scenario base here. So let's use this for instance and say this is Johnny. And Johnny is 30 years old, and Johnny buys a $500,000 whole life policy. Okay. And he pays $421 a month for this whole life policy for $500,000. Now, I want to break this down for you because we got some numbers that I want to show you. So I want to show you where I got these numbers from. So if you look at this site here, what I have here is the average life insurance rates for 2021. All right. And so when we look at this, is we basically go here and we focus on term life insurance by age. And so we looked at Johnny age at the age of 30. We will go right here. So Johnny at the age of 30, his average for a term life will be about $25.44 if he was healthy. Now we go down here and we'll focus on the whole life. Okay. The whole life coverage at the age of 30 on a $500,000 coverage, Johnny would pay about $421. Okay. So this is for 2021. So this is where I'm getting my numbers at for $421 a month on a whole life policy. Okay. So a portion of this $421 in this particular policy is going to a cash value in Johnny's whole life policy. Okay. Now, what happens to the money that goes into cash value? The life insurance, the broker, who's ever selling you this plan, they're going to tell you that this cash value is growing interest, is growing over time. All right. But while you're putting this money into this whole life policy, and it's for your insurance, right? But this money that you put in this whole life, right? If you want to have access to it, it's either two things that happens. You either cancel the policy or you borrow money from your own policy. And this is what people like doing, to say, you know what, I can have this life insurance and then have access to it to borrow from it. But here's the one thing that sucks about it. And I want to break this down. Let me just highlight this right here. Because if there is nothing else that you guys learned today, I want you to get this here. All right. You put money in there in this whole life policy. In order to take out the money from the cash value, you have to pay interest on it. So let me ask you this question. The money that you got in your savings account now, you go down to your local bank and you take money out this savings account. Would you pay interest on the money on this savings account to take the money out? Absolutely not. So in this whole life policy, imagine this, right? You're paying $421 per month in this policy. Portion of it is going towards the cash value. And if you want to borrow from it, you got to pay interest on it. And it's only growing on an average return of 1.5%. Oh, that's lousy, man. That is lousy. This is one of the worst financial decisions that you can make for us with a cash value. All right. So let me explain. Let's go even further here. Let's say after 30 years, Johnny passes away at the age of 60. So we take our $421 a month times 30. Johnny would have paid $151,560 total. Okay. So when Johnny passes here at the age of 60, Johnny, let's say for instance, in this scenario here, let's say for instance, and this is a question I want to ask you guys here. Let me highlight this as well too. So Johnny, in this hypothetical scenario, has $60,000 in cash value at the age of 60 when he passes away. And he also has a whole life policy at $500,000. How much does the life insurance pays out to his family? This is a question that I want to get a little interactive here. Somebody jump on here. And also too, want to let you guys know, everybody that's on this call is going to be eligible at the end. Put your name in a drawing for a $25 drawing today as well. But answer this question here. I want somebody to jump on here. How much does the life insurance pays out to Johnny's family in this particular scenario here?
Don't they get that $500,000?
So they get that $500,000, right? That 500,000, right? But let me ask you a question here. He also has $60,000 in this cash value that's been growing on interest as well. What happens to this $60,000?
It's going to be taxed.
Or would it just dissolve? Would it just go? They wouldn't pay it out because he died.
So check this out. So there's some very good answers, right? In a whole life policy, guys, he's going to get this $500,000 whole life policy. That's what they're going to pay him. This $60,000 right here, it's going back to the insurance company. They don't pay out on the cash value. So all this is an opportunity. While you have this whole life policy, you have an opportunity to borrow against it. It's growing in interest, but they're only going to pay you on this $500,000 policy. All right. That's why this is one of the most lousiest plans ever, because you're paying a portion of this $421 a month going into this cash value for an opportunity for you to borrow at 1.5%. That's growing at 1.5%, and you got to pay interest on it. That's why we're not a big fan of a whole life policy. So his family's going to get this $500,000. And the good thing about this, though, I will say this here, they won't pay taxes on this $500,000. Okay. That's the good thing about it. Now, I want to go here and share this with you as well as a review. So whole life policy review. You have a lousy rate of return. So this thing in this cash value is going about 1 to 1.5%. The insurance company keeps the savings on it. So now I want to say three things here to close out just on the cash value, and then we're going to go look at the term life. There's three things that keep the middle class in the middle. That's car leases, your whole life universal life insurance, and we're going to talk about universal index universals too in a minute. and credit cards. These are three things that are really dumb financial decisions that the middle class keep themselves in the middle class. All right. And I'm just being frank, real, and raw with you. All right. So before I go over here to the term life, does anybody have any questions before we move into the term life based off this information I presented here for the whole life?
I got a question.
Go ahead.
How y'all doing, this Alicia? Are you gonna touch on that universal? Cause I pulled my plans for this class and I don't see nothing to say term or whole. I see universal. So
I'm a hit on universal, and I'm a hit on it hard because Alicia, I would just tell you this here. Over the last month, I've had 4 people come to me and had index universal life plans and say, Sherwin, I got a Roth IRA inside of it. But we're looking at the returns and it sucks, right? So we're going to look at that here shortly. Right after the term life, we're going to look at that index universal life plan. And I'm glad that you got your contract. And so after we get done today, you're going to be able to go back and look at the contract and wonder, what the heck is this and why is it doing this? All right. So yeah, we're going to touch on that.
Okay, thank you.
You're welcome. All right. Any questions on this whole life policy? Let me ask you a question. And I don't want to throw anybody out the hat. You can send me a private message. We'll get back into it. Does anybody have a whole life policy?
Oh, I can answer that. I don't have one personally. I got one for my daughter just because I felt like it was a good rate. I didn't look at it to like use it to borrow against her, like the borrow, like the get cash value in the borrow. I just looked at it as, you know, I know when it's a child, you're not going to be able allowed to get so much life insurance because they're a child, and just because of her age, she was a little younger then. She was a few years younger. She's 7 now. And so I know you can do multiple policies. So I did multiple policies on her just to get, so that I know that she can have that to life, you know, her whole life. And just as long as they continue to pay, I know I'll pay on it as long as I'm here. But of course I would, you know, transfer and allow her to pay on it. So just that she has something to where, like, if in the event she passes, they have something for her to bury her. But I didn't look at it for the cash value. I looked at it for it wasn't really that much. It was like for her policy and her 2 policies, I pay under $20 for both policies.
Now, I would tell you in that particular scenario, it's really not that bad, right? I mean, if you look at it as a young mother, you have a whole life policy for your child in the event something happened to them. $20 is not that bad. So you take care of the burial expenses. I'll give you another scenario where this could potentially work. I had an uncle that was mentally handicapped. I want to say retarded, but he was older. He passed away, and of course, right, family have to pay for those funeral expenses. So I have a brother-in-law that has Down syndrome, and he is in his mid-30s. So if something happened to him, we will have to pay out-of-pocket expenses. So what I did, I went and bought. Now he does have a whole life policy, but I spend $20 a month on it. So it'll pay $10,000 for his funeral expenses. So I did that. So when you have those particular cases, those special circumstances, that's an overall good decision. But when you have family really dependent on the makeup for your overall income, whole ain't where it's at. Term is where it's at, and we're gonna break that down here shortly. But thank you for sharing that, Paris. That's another good perspective to look at it in the event if you need to take care of some funeral expenses on a smaller scale and not paying the big dollars in itself. The main thing is if I go back over here to this website here, and the older that you get, you will see that in a whole life here for a 30-year-old, you're paying $421, but it steadily continues to go up. So it's kind of important. Now I would just tell you, when I was 33, I went and got when I was 33, I went and got a term life policy, and my policy that I currently have is $1 million. So right here at 33 for $500,000, it's about $26, which is really kind of like about the standard rates of what I paid when I was 33, which was 6 years ago. All right. So, of course, the older you get, the more expensive it is, and depending on your health, is going to be more expensive. All right. So let's go down here and let's focus on this term life for a second. All right. So let's look at the difference of the $421 a month in the whole life versus in the term life. If we go right here, you're looking at this $25 a month. So we looked at Johnny's scenario here, and I'm gonna go back up here for the ones that just kind of joined your average life insurance rates for 2021. And we're gonna go right here and we're gonna focus on this $500,000 coverage for term life. And I'm gonna go right here and I'm gonna focus on this 30-year-old Johnny as a man. He's gonna pay $25.44 a month for term life insurance. All right. So let's say, for instance, Johnny has term life for, I don't know, let's say, for instance, 30 years or 25 years. All right. So that's a difference of this $421 and $25 a month. That's a difference of $396 a month. I want to round that up to say that's a difference of, say, $400 a month. Now, you guys have probably heard this term before. This is my philosophy on life insurance. You buy the term and invest the rest. All right. And here's why I say this, right? Because if we go back up here and we looked at Johnny's scenario, and if Johnny here, we're going to use the example of 60, right? So I'm going to pull up my infamous Excel spreadsheet. And if we looked at this on a term, investing the term life insurance. So I take my 30-year-old Johnny, and I take $400 a month difference, because we looked at the 421 minus the $25. So that's $400 a month. So $400 a month times 12 is $4,800. And if we put this inside of an investment like a Roth IRA account, that's going to give us a 10% annualized return. We saw that when Johnny got to the age of 60 here, let me just highlight this here. When Johnny got to the age of 60, his payout was going to be $500,000 in this whole life policy. All right. During this time frame, Johnny would have paid $151,000 over these 30 years. Okay. But if you invest this 100 here, right? I want you guys to focus on this column right here really quick. These are the contributions here, the running contributions, right? Of your $400 every single month. So when Johnny get right here at the age of 60, he would have contributed right here, this $148,000 right here. All right. But guess what, guys? He would have contributed $148,000. But if you go right here and look at this column right here, the end of year balance, based on a 10% return, when he get to 60, this now is worth $960,000. This is the very reason why I tell you, you buy the term and invest the rest. If you don't do this, then you do the whole life. I suggest you don't do that though. You buy the term and invest the rest. At 60 years old, Johnny family now will be able to get $960,000 instead of $500,000. All right. Well, someone say, well, you're gonna have to pay taxes on it. Well, if this is inside of a Roth IRA account where taxes already been paid, his family is going to get this $960,000 tax free. Okay. So for me, this is my philosophy. You're having this term insurance or life insurance just as an insurance, like on your car, man. In the event something happened to your car and it's more than what you could pay, you're going to pay that deductible and they can pay the rest. It's the same way with your life insurance. Because guess what? You got your 401k accounts. We teach in these classes, you got your Roth IRA accounts, right? So you got other assets that's growing as well that you're going to be able to utilize and pass down to your family. But using the difference here of investing your money and allowing that money to grow over time, when you get right here to, by this time here at say 500,000 here, right? At the age of 53 here, let's focus on this here. At the age of 54, you would have had the $500,000 here in that whole life policy if you'd have went that route. All right. Well, think about this. this is just assets that you want to allow to just continue to grow over time, because those are the ones that's going to be able to really just take care of your family. So instead of just spending this money, man, and not having nothing in place, that's not what we want to be, because if we don't have whole life or term, and then something happens to you, guess what you got to use? You ever go on Facebook and they have that GoFundMe? That ain't, I mean, that's the legacy that you want to have if you got young kids in place for you now. Think about this. You can literally go, and this is, I don't have no affiliations with this here, but 6 years ago, when I went and got my life insurance, I was listening to Dave Ramsey during this time frame. But Dave advocated for this particular company here, and several of the members in the community have used Xander's life insurance. They're a broker based out of Tennessee, and you will see Dave Ramsey here. He advocates for this. But this particular broker here, you call them, you give them your information, and you tell them, based off how much you want, and they're going to look in your local area, and they're going to look at the brokers, and they're going to send you like different quotes, right? So when I got my policy, I got $1 million policy at the time, and I had to get a physical. I think if it's up to like $1 million, I have to get a physical. And so I pay right at $52 a month on $1 million policy. That expires when I turn 53, because I got a 20-year term policy. All right. But guess what, guys? If something happened to me now, that $1 million, right? I have that. Leslie will actually have that now without even having to get that extra $1 million on my term life would be just a plus on what we can actually have. That's why I'm saying it's no sense of paying whole life all your single life when you're building assets, when you're going to have, as we teach, you're going to have this $500,000, you're going to have this 200,000 over time. Still get some terms. So in the event if something happened to you, that's just going to be on a plus on what you have as far as building your assets. All right. So that's very important. I would just tell you on this line here, we got teachers that work for the state of Florida. That's in the Florida retirement system. We have people that work for the state of Florida that have these pension plans, these state retirement plans. All that stuff will be paid out to you as far as assets to your particular family. We have people on here that's working for the federal government that have TSP plans. If anything happened to you for your retirement, they're going to pay this out to your beneficiaries. So also think in that mindset for your retirement, the things that you have building, that's going to be paid out as well. But I'm a big advocate of the term life, having something in place, and then having the term in the event something happened to you, just for more supplemental income for you and your family in itself. All right. So before we go to the Index Universal Life, I want to see if anyone have any questions here on the term life and the difference of what we discussed for us, the investing piece. All right. No. Okay. All right. So we're going to go right here, and we're going to focus on this Index Universal Life here. Now, man, let me just tell you here. I get saddened when people tell me this, and brokers make a lot of money. Life insurance brokers make a lot of money off Index Universal Life, right? So here's what happens with an Index Universal Life plan. So they're going to sell you a life insurance plan. And every single year, you're going to be under a contract. And under that contract, they're going to tell you it's going to be for a certain amount that you will get paid out. So let's say, for instance, I had an individual come to me 2 weeks ago, and they had an Index Universal Life plan with an investment on the Roth IRA rolled into it. All right. So they were guaranteed amount every year. So what happened in this particular case, their guaranteed rate was 1.5% every year on their investments inside of this investment plan. So this was going to be growing at a rate of 1.5% regardless every single year, whether the market was up 30% or whether the market was down 30%. Every single year, this person here was going to get paid out 1.5% on top of whatever their particular policy was. Now, it's two sides to this. You can have, so Alicia, let me ask you this question. Do you have the life insurance, or do you have the life insurance tied with the investments inside of your index universal life plan?
Not sure how to answer that because I don't really. Sorry, can y'all hear me?
Yeah.
I'm not really sure how to answer that because I don't really look at it. I do see a bunch of numbers, so I'm assuming it's the second one probably, but I'm not sure.
Okay, no worries. So, so when you look at these index universals, right, it's either specifically for just the insurance piece or it's the investment side. And basically what I'm talking about here is on the investment side of it. All right. So you're guaranteed 1.5%, and they will sell you these plans, and they'll tell you, hey, look, you're in the S&P 500, right? And so when I'm looking at these contracts and I'm looking at what these amounts, so somebody was saying, okay, look, they started out, I had this person the other day say, hey, we started out with 30,000. All right. And then after 6 years, this 30,000 only grew to like $3,000, and it was inside of a index universal and a Roth IRA and an S&P 500. And I'm thinking to myself, after 3 years, that S&P 500, it's been up like 60%. Why this only grew like $3,000? This should have done more than that. Well, when we went and looked at the contract, it only said that it was going to grow 1.5% on top of what they was paying on a monthly basis as well. So they're only seeing, you know, over those 3 years, they only saw like 4.5%, where the S&P 500 was up 60%. And guess what happens here, man? Once you get locked inside of these universal life plans, guess what they do? They put this right here. They put the surrender value. Because guess what? When you find out that you in a doo-doo plan, they got you locked in and they put a surrender value on there. And towards the plan, it's expensive to get out. It could be like $3,000. No, it could be like, say, $6,000, $7,000 just to get out this plan, because they know that you in a sucky plan. And because of that, you wait it out. And the later that you get out in this particular contract, the lesser the surrender value is. Now, I had a member in our community. She has a son my age, about 9. And she had an index universal life investment plan for her son. They didn't really know. But when we broke down the numbers to them, you know, they were paying $200 a month towards this particular plan, but they were only getting 1.5% returns on this. And so what I was able to do is I was able to show her, hey, look, my son is 9, and here's his returns and what he's getting. He's getting 17% per year. And we open these accounts up at the same time. So it was interesting how we was able to look at the numbers. But guess what? When she got the numbers and she found out that she wanted to get out of this plan, her broker told her and her husband that the surrender value was going to be $5,000. So guess what? They didn't want to cough up this $5,000. I told them, I said, hey, look, just wait. And I think for 2 years, it was going to lessen. It was going to be about $2,500. All right. So, you know, you think about it, you don't really know, man. You figure you get an investment plan with a life insurance plan tied to it, and you got your kids set, but they don't really tell you you're getting a 1.5% return. And the stock market in itself, it's really not, you know, this is something great if you're probably older, and not even really if you're older, to be honest, because it's like, you know, you don't want to worry about the fluctuations of the market. 1.5%, you can put that in a savings account, basically. But it just sucks, man. This really sucks. Rose, you got your hand raised. Go ahead.
Yes, I got a question. So like what you're saying, if the return is on like 1.5 on average, but if the S&P is on average 10, are they keeping the other 8.5 themselves as the company?
Absolutely, Rose. You got that right. That's why these brokers, you got to be careful, man, in these insurance companies, right? They have to pay out a bunch of people, but this is how they make their money. Go ahead, Alicia.
I was reading as you were talking, and it does say something about S&P 500 values. I would share my screen if y'all wanted me to. I don't know, because I don't know about this stuff. I don't read anything, that's bad on my part. But
so, Alicia, that's only if you want to, but I would just tell you this here. That'd be a great learning tool for people to see this. So you can share your screen.
It's my daughter's policy. I pay $95.50 every quarter for the premium, and I don't know. I'm just looking at it. So hold on, let me see how I share it.
And Alicia, I'm gonna tell you right now, this is gonna be a great example for this class, right? Because if you're paying $90 a quarter, that's $90 times 4. That's about $360 for the year. And we look at this contract, and I want to see the guaranteed returns on this.
Okay.
Now, you're doing it from your phone, or are you gonna be doing it from your computer?
No, I'm actually just looking at papers. I don't know.
Well, it might not be good if you just doing it that way to where we can zoom in. Let's just see if you could just do it though. If not,
Okay.
We're gonna we'll just see.
Okay.
But this, if Alicia can show this, man, and we could go in that contract and we could look at the guarantee. See, they're gonna be giving her a guaranteed rate of return, regardless whatever the market does, whatever the S&P 500 does. All right, this is good here, Alicia. This is what I was talking about right here. We get to that contract and we look at it. We want to look at what is that guaranteed contract. I mean, that guaranteed interest that they're showing her. I want to.
Can y'all see it or no?
Yeah, we can see it.
Okay.
Yeah, we can see it. We just got to get over to the contract now.
I'm not sure if I have a contract. I think this is my quarterly thing. It says.
All right, let's take a look at that then. Let's see. Typically, it won't show in the quarterly, but let's just take a look at it.
I have something at the bottom here that says this.
Well, the only thing is we're not actually seeing the statement at the moment. It just says you're sharing your screen.
Oh, okay. Sorry. Turn it around. It just says you're sharing your screen. That's all I see as well. I'm sorry.
Okay. I don't think it's gonna work. Alicia. Oh wait, I wish it could, but oh wait, let me see here. Yeah, it's not showing.
Okay.
It's not showing. Yeah, it's not showing. Matter of fact, guys, check this out. I have one. I got to go to my email here. And one was sent to me. And I want to show you guys this here. I forgot about this here. I have one of a Index Universal Life Plan that had the S&P 500, and it showed the guaranteed rate of return with this here. I'm just going to my email here. And I want to show you guys this, man, and even I saw one last week. We looked at it. I got a person on here now, good family member of mine. I won't call them out, but they were in the plan, and they clearly saw their rate of return. All right. Oh, here it is right here. All right, here we go right here. So let me just do this here. Let me go here. Let me share my screen. This is what it looks like, guys. This is pretty cool here. This right here is a Index Universal Life Plan. All right. This person here had a life insurance investment plan, and you will see here they're telling you it's an S&P 500 index. All right. But look, you see this fixed account here? It's telling you the interest rate on this here is 1.2%. That's their contract that they're locked in on it. So every single year, they're going to get paid this 1.2%, and they're going to get paid some dividends, but it ain't that much. This is what they're going to get paid on every single year, this 1.2%. But they're telling them it's invested in the S&P 500. That's the thing that sucks about this. You see S&P 500 here, total contract value. This money here is really not increasing, right? So, we just kind of have to be careful. That's what that looks like. So we just have to be careful, because if I share this here with you guys, what the S&P 500 has been doing over the last 3 years, and if you actually had your money actually working for you inside of a sucky financial plan with an Index Universal Life Plan, let me just share this here with you here. So if I go over here and I want to share this here, I'm gonna go to him and hit these major indices here, right? And it's going to show us if this person here was in the S&P 500 fund. Let me just go right here. Let me go right up over here. And this is important for you guys to see. I'm going to go right here. I'm going to hit S&P 500. We saw that was on that plan. All right. So we go to the S&P 500. You guys see it right here, S&P 500. And this is investing.com. And if I go right here and I put the historical data, all right, and once I type in historical data here, I'm going to basically go right here, and I'm going to change this up here. Let me just do this here. We're going to look at a 3-year return. And this right here is going to show you what this has been doing over the last 3 years. So let me put this right here. So I'm going to take this back here, say to 2018. And all we're doing is taking, let me see if I can go, we'll do this 3-year time frame. So we hit apply. All right. So basically what this is doing, this is taking me from September 22nd, 2018 through September 11th through today, basically. And we're focusing on this change percentage right here. All right. So when I scroll down, it's going to give me the total change percentage from this time frame here. If I scroll down right here, man, there's some good stuff, guys. Just change percentage over the last 3 years during this time frame, it's been up 53%. But when you get inside these index universal life insurance plans and it's fixed and it's locked in, man, it sucks. So we take this 53% divided by 3 years, it's been averaging 17.6% returns, right? Versus your 1.5% return or your 1.5 or 1.2, right? So if you got an index, man, if you got a whole life, I don't know if you can get out. We have to go and look at your surrender value, but it just sucks. But at least I see your hand raised. Go ahead.
I don't think I put it down. Sorry.
Oh, okay. All right. So, man, as we commemorate the day on 9/11, we want to make sure, man, if you don't have life insurance, if you don't have enough, you got it more than 9 times out of 10, you have life insurance through your job. And my life insurance, I have it through my job, but it's at 1.5 times my salary. So that won't be enough to take care of my family. That's why I have supplemental. But I've built up enough assets now to where if anything happens, I've shared my story. I won't go into that, but we've taken care of. Go ahead, Tiffany.
My question is for that universal one, are you giving them a bucket of money at first, or is it something that you pay every month a little bit?
Right. You're paying well, I'll just tell you now, the index universal life, they have certain different type of options, right? If you want to put a little book load in there, you could, but typically 7 times out of 10, people just starting it out and they're starting on a monthly basis. So that one particular plan that I showed you there, this person here, man, they've had this account for a while. I'm talking about years, decades. And they just don't know. So when we saw it, we was just like, their contract was getting ready to come up. And so they came to me and I'm like, okay, we looked at this and you know what we're getting ready to do? That index universal life, right, is pre-tax. So what we're getting ready to do is, it was about $34,000 in there. We're getting ready to roll that over. Since it's pre-tax, we're getting ready to roll that over to a traditional IRA account. So instead of getting 1.5%, now we're going to be able to be in control of it. And we're going to really get the true market value of the S&P 500 now. So the S&P 500 is up, say, 16% this year. Now they're going to really start truly getting reflected on that 16% versus the 1.5% locked in on that contract. So if you're in that plan and you want to get out, you could definitely roll it over as well to avoid those surrender fees. All right. So before we close out, we're going to do our drawing, but I want to make sure here while I go here and I put everybody's name in this drawing, I want us to be able to answer a few more questions while I put the names in. So if you have any questions based off the information that was presented in today's class, I want you guys to ask it now while I input everybody's name here into this random name picker.
I have a question.
Go ahead.
So you showed us the Xander website. So do we just Google the Dave Ramsey Xander website and then try to look up for policies?
So basically, if I'm gonna do this right here, let me see here. If you just go to Xander's Insurance, and basically they got a number on there, you can give them a phone call. And you're going to speak to someone on there, and they're big proponents of term life, right? So let me just drop it here in the chat, the link over to Xander's here. So you just give them a phone call and you tell them based on your age or information, and they're going to give you want to tell them term. They probably will sell you whole life, but generally what we discussed today, you want to be in a term. And once you give me your information, they'll be able just to kind of just give you some information based off the information that you provide to them, the dollar amount, and things of that nature, what your particular term will be. We had a client where her mother is sick at the moment, and she saw it was important for life insurance. So she got life insurance for herself because she has a young son. And she's in her 30s, and she got term. I want to say her term was like $20, because for a female, it's less than it is for males. Females seem to do a better job of taking care of themselves, so the insurance companies see that and realize that. So that's why the women rates are a little bit more reasonable than the guys. But great question. So you have that there. Yep. All right. Any more questions?
Sharon, good morning. It's Shanice.
Hey, Shanice, good morning. How's it going?
What's up, big brother?
I'm doing well. I'm doing well.
I mean, I guess my question is it too late to get into investment accounts and stuff in your 30s with 11-year-olds? Is it ever too late?
It's never too late. I always say the best time to invest was 20 years ago, but the second best time to invest is today. So never, man, never at all. And 30 is still young. Shanice, I started my financial journey when I was 29. So it's never too late.
Okay.
Yeah.
Thanks.
You're welcome. All right. Let me see here. So we do have a question here in the chat. And let me see. I think it's specifically also to everyone. So we get term, and then when it expires, let me see. Hold on one second. Let me go back here. So when we get term, and then when it expires, just submit for term also. Hey, Crystal, do me a favor here. Can you expound on that a little bit more so I can kind of answer that? I just want to make sure that's a very good question, but I want to make sure I fully understand it too, though.
Sorry, can you hear me?
Of course. Yeah.
Sorry, I was cleaning out, so some of my sentences did not make sense. Hello, everyone. I was just saying, so you did the term life for 20 years, and when it comes to term at age 53, then you could sign up for another term again. Just make sure you call the later terms up, or?
Well, yes. So I could sign up for another term, right?
Yeah.
But it's going to be more expensive.
Okay.
But I won't necessarily need another term though, because what happens is my policy now is $1 million.
Okay.
And so by that time I would have built up, and I've have it now, of assets of $1 million, right? Or net worth of $1 million. So after 53, guess what? And Crystal, that's a very great question. Guess what? After 53, when my term life expires, I'm not signing up for no more life insurance because I don't need it. Right? And so that's why I want to get for you guys to look at. Everybody feel like you have to have life insurance. But think about it. If you have a $500,000 policy and you have assets of more than $500,000 and they're going to continue to grow, what's the point of you having life insurance? Because if anything happens to you, your beneficiary could actually sell some of those assets, or if you have that in your retirement accounts, they're going to pay that out to you anyways. So what we like to say is that additional money, once it expires, right? Put it to work. Okay. That's a great question.
So Sharon, for example, I'm 33, the average time to get a term is for 20 years, or like what's the recommended time for myself, and what's the recommended time for Cadence? And are kids allowed to get term? I don't know.
So, but they typically, like with kids, right? Brokers, they will put you under a like an index universal life, right? But you can't get life insurance for a child. But my question is, right? Let me ask you this here. Why would you get life insurance for your daughter?
Personally, I'm starting to see that death doesn't come after just the elderly. And I personally had children in my family and close friends who passed away. So you know, I'm not God. I just want to be prepared. And I'm kind of starting late in life. So if I'm not in a position, I want to be able to give her a proper burial and
I got you.
whatnot.
I got you.
And I think another question I have is, can life insurance be used if they are ill? Is it something that you can take funds out? Like if insurance doesn't have proper coverage, can you, can you utilize the life insurance for medical life changes?
Right, right. You know what? So they do have those type of policies in place. To where, let's say, for instance, you're on your deathbed or you want to travel and kind of want to take advantage of what you've been paying into it. But those type of plans is generally like whole life and index type plans, right? So that's another situation, right? If you're kind of like, maybe ill, right? It's going to be a lot more, but they're going to offer you the flexibility through certain coverages in those plans to be able to withdraw from it, and utilize it. So let's say, for instance, you got that $500,000 policy, right? Not even using the cash value, but they'll allow you to withdraw some of that $500,000. Say, for instance, you want to do $100,000, just say $80,000, right? I have seen coverages where they allow you to withdraw from that, but during your payout to your beneficiary, they'll just subtract whatever your overall policy was. So I got a good guy out of Jacksonville, Mariko Walker, good colleague of mine. He came to us last year, and he sell life insurance plans, and he sell those index universal lives. So I'm just always leery of those, because if you get under contract and if you're looking to utilize it for investment option, it's lousy. But if you're in a certain scenario like that, then I would say on a special circumstance, that's where index might be beneficial.
Okay, thanks.
Mhm. All right, we had another question here. Let me just do that here, and then we're gonna get to this drawing. Let me see here. Can I send you mine? Oh, that's a private. All right, got you. All right. Any more questions here before we close out?
This is Shanae.
Hi, Shanae. Good morning. How's it going?
I'm good. Can you elaborate what you asked the question? I believe it might have been Crystal when you said, why do you get the plan for the child? And then she said, for financial reasons. But can you elaborate on why you don't need a plan for your kids if you are financially stable? Because your kids can't, the money that, can you just elaborate on that, if that makes sense what I'm saying?
So let me open the floor on this, right? And I know you probably don't want me to do this, but I'm gonna turn it back over to you, and I want you to answer that because I know you know the answer to that.
Oh, no.
No, seriously. Let me get your and this is good discussion here, right? Because let's say, for instance, you are financially in a place prepared, right? So let's say, for instance, we don't want this to happen. But let's say, for instance, one of our kids do pass away and we don't have life insurance in place to pay for our kids when they pass away. Let's just say, for instance, you take a 10-year-old child that unfortunately passes away, and then there is a burial expense, 15,000, 20,000. Where do we go to pay for that? That's probably the question, I think, Shanae, what you're referring to, right? And the question would be, if you're, go ahead.
I guess what I was trying to say, and yes, you just get it from your, you can get it from your savings, you can get it from your investment account if you need to reach into those. But what I was saying is, normally for children, you really don't need it unless you have it. But if you don't have it, then I guess you will need it. But what I'm saying is, mostly what insurance policies are for working parents, because that's what takes care of the household. With children, you really don't need it because you save that. You save that money and you should be able to just pay it right out. Am I making sense what I'm saying?
Right. But I think what Shanice was saying, that's a very good point. Shanice was saying, okay, look, what if I don't have the savings, or what if I don't have the money in the retirement? You
Then
know, where is that money gonna come from?
then I think that's where the policy that comes in, or you can get it from your work policy because you're working. So
Right. Now, I think that's a
Well,
very good. Go ahead.
I'm sorry to cut you off. Okay, so with that, I understand what you're saying, the working policy, but I don't know. I know my policy covers children like at my work, but what if, is it jobs that policy doesn't cover children?
I would probably imagine so, right? Because it really just depends on the job and insurance, right? So let's say, for instance, and you have a very good job because you work for federal government, right? So that does cover that. But let's just say if somebody don't have job covers the child, right? Then I think in those type of scenarios, right? If you wanted that extra security, in the event something was to happen, of course, you know, the younger the child is, the cheaper it is too. So I think, Paris, you mentioned, I think you were paying $20 a month.
Right, but I had more than one policy. Yes.
Okay. So I mean, that wouldn't necessarily be bad because I mean, you think about it, $20 a month, you're spending that eating out. So you're using that for insurance in the event something happens to your daughter. But here's your question though, right? If your insurance is covered through your job for your daughter, then what's the point of having?
Yeah, I just thought about it. I said, well, that makes me think I could drop the whole life if I got a policy through my job through her, because I wouldn't need it, because they're only gonna, like I say, for kids, they're only gonna let you get X amount of dollars.
Correct. And then that extra $20 a month that you're paying, you could put that towards a savings account or her custodial account.
Right.
Yeah.
Correct.
Yeah. Man, this is good. This is good. We're thinking, man. I love this. All right. All right. You have any more questions? All right. This has been a good class here. So I do have our names in here. And so let me just share this here with you here. Now, if you're, oh, you know what? I got, let me see here. Let me share my screen. If you don't see your name, let me know, because I want to make sure I include everyone. So I need to add Miss or not Mrs. Dr. Akins, right? Let me see here. So if you don't see your name, let me know. If you're on this call. I got some family members on here, so I didn't include my family just for the ones. All right. So I just want to make sure here. We're getting ready to do this drawing here. If you don't see your name, let me know. If not, we're going to go ahead and do it. And this is going to be just for $25. You're not doing an Amazon gift card. This is going to be $25. So we'll Zelle it to you or Cash App it to you. So thank you guys for joining in. Hope that you guys got some good information out of this as we continue to reflect and commemorate on the 9/11. So if you do not have insurance in place, this is recorded. You can come back and look at it, but we want to make sure that we have enough. Okay. All right. So let's go here and do our random picker here. All right. And our winner for today is Miss Petula. Congratulations. We will be getting out a $25 to you with a Zelle or a Cash App. So congratulations, Miss Petula, on today's winner.
I can get rid of this thing.
Well, thank you. Wow.
Yes, ma'am. You're welcome. You're welcome.
I appreciate that. God
Yes.
bless you.
Yes, ma'am. Yes, ma'am. So, all right, guys. So thank you for joining in today's class, and we will see you guys next week. I'm not sure what the topic will be, but we're focusing now on having these classes every week at 11 o'clock a.m. So with that said, I hope you guys have a great weekend. And if there's any questions, you guys let me know at any time. As always, be well, be blessed. And as always, let's continue to win. All right, guys, have a great one.
Thank you. You too.